In this video, I'm going to discuss what is the pattern of NTA UGC NET JRF economics paper. We are going to go in detail and talk about the syllabus of UGC NET. And in the coming few videos, I am also going to talk in detail about what has been the pattern of the last paper, how many questions have come from which domain. Let us get started on this. So let's start and understand what is the exam pattern and marking scheme of the exam. There are going to be two papers, paper 1 and paper 2. Paper 1 is going to be a completely teaching or research aptitude kind of paper. This is going to have questions which is going to be logical, comprehensive, which is going to have questions related to IT, etc. And then we are going to have a domain specific exam. In our case, it is going to be economic specific exam. And this is going to have 100 questions. Paper 1 is common across all the subjects. Everybody has to give this paper irrespective of the subject you choose. There are 50 questions in paper 1, 2 marks each, so 100 marks for paper 1. There are 100 questions in paper 2, again 2 marks each, so 200 marks for paper 2. In totality, you have a 300 marks paper in which you're actually attempting 150 questions. What they have now done is that you will have to give this exam in 3 hours without any break. So, earlier we used to have paper 1 and then there used to be a break and then we used to have the next paper. But now this is not the case anymore. All questions are compulsory. So you can also, allot your time accordingly. If you want, you can do paper 2 questions first, go back and then do paper 1. If you think there are questions which are comprehensive or paragraph questions and require more of your time, you can keep it for the last part and first focus on the easy questions and complete those. So we will discuss that in detail as to what should be the way to solve this paper, how you should go about and solve a UGC NET paper. Now, for each correct answer, as I told you, you will get +2. There is no negative marks for an incorrect response. If you do not answer a question, then no marks would be given to you. Let us now discuss in detail what is the syllabus of paper 2, which is economics. The first most important thing that is asked in economics is microeconomics. For microeconomics, we are going to have the theory of consumer behavior. When I say it is theory of consumer behavior, I am talking about things like what is budget line, what is indifference curve, what is MRS, what is equilibrium condition, etc. Everything related to the consumer behavior. What are complementary goods? What are substitute goods? Everything related to consumer behavior would be asked here. Then we have the theory of production and cost. Under the theory of production and cost, you would be asked questions like, what is marginal product? What is marginal cost? What is a production function? What is a cost function? How do you define the optimality condition for a producer? All such production related questions and cost related questions would be asked here. How do you define relationships? So, if I have to go ahead and I have to draw a marginal cost curve and I have to draw an average cost curve, where is the optima? What is the relationship between AC, AFC, AVC, etc.? Then we will have questions related to risk. What is a risk neutral person? Who is risk averse? Who is risk lover? How do you find the, from statement, how do you find that the individual is risk lover or risk neutral? Then we have game theory. Now, in game theory, you can have basic questions like what is Nash equilibrium, or you can have a little advanced question like what are non-cooperative games, what are cooperative games, what is prisoner's dilemma, how do you find prisoner's dilemma, etc. Then we are going to talk about the market structures. When I say market structures, I want to understand what is the difference between perfect competition, monopoly, monopolistic, oligopoly, etc. So I want to understand the difference between these market structures. Then we want to talk about factor pricing. How do we determine how much wage the labor is going to get? What is the optima condition for finding the wage? What is the optima condition for finding the rent? What do you mean by value of marginal product? What do you mean by marginal product, marginal revenue? We want to understand all these things. How do I find the value of marginal product of capital? Then we want to talk about general equilibrium. In general equilibrium, we are going to talk about the Pareto efficiency conditions. I am going to talk about what happens when endowment is given to you. How do you find the Pareto optimality condition when there are two individuals? What about this condition? What does this condition MRS XY is equal to MRS XY for individual A, B represent? What happens when these individuals go and reach the market? We are going to talk about Calder-Higgs and wealth maximization. I am also going to talk in bits about the social welfare function. Important. So, we are going to talk about the social welfare function. We are going to talk about the fundamental theorems. First welfare theorem, second welfare theorem. What happens when we are not in a perfectly competitive market, but in fact, we are in a monopoly. In monopoly, what happens if I have to go and reach Pareto optimality? Can I reach that? Do I have to go for a second best option? What is the second best option in that case? I'm going to discuss that in detail. Then we are going to talk about asymmetric information. What is adverse selection? What is moral hazard? How do the two things differ? Which of these occurs before the happening of the event? Which of the two occurs after the event has occurred? So, to give an example, when you're signing a health insurance and you hide the details about your health, what is that? Once you have signed the car insurance agreement and now you ride your car at a very high speed, which is that? So you have to understand the difference between adverse selection and moral hazard. The next topic that I am going to talk about would be the next important module, which is macroeconomics. In macroeconomics, we will start with national income. We will understand what are the different ways, income method, expenditure method, product method, what are the ways to calculate national income. We are going to understand what includes what. If I talk about conversion from GDP MP to GNPFC, what does this mean? Or maybe NNPFC, what does this mean? So we have to understand the concepts behind each of these. What is net factor income from abroad? We want to understand that. Then we are going to go ahead and talk about the determination of output and employment. What out of the two, whether classical or Keynes, which has a full employment level of output, which does not has a full employment level of output, which however has price rigidity or wage rigidity? I want to understand that. So, I'm going to talk in detail about the difference between classical and Keynes, but not only that, we will touch upon neoclassical, neo-Keynes. What is monetarist part of the economics? We have to understand that. Then I'm going to talk about the consumption function. How do I consume and what are the various ways of me identifying a consumption function? Does this represent a consumption function or only this represent a consumption function? or this represents a consumption function where I am talking about my expected income. What are the different hypotheses between the in the ways that I consume my income? Do I consume my income only on the basis of the current income, or also on the basis of the past income, or on the basis of changes in income? I want to understand that using various hypotheses, which I will focus during the subject. What is investment function? When I say investment function I understand is this: I is equal to I bar minus bi. Investment is negatively related to interest rate. I want to understand why is that so. What is marginal propensity to investment? How do I understand that investment changes when interest rate changes? What is autonomous investment? I want to understand what is accelerator effect. What is acceleration in investment? So for example, I will discuss in detail what is this hypothesis when you have an aim in mind that this is the amount of investment I want to do, but currently you are at some other level of investment. How do you progress and attain that level of investment? What is the demand of money? What is the supply of money? Why is the supply of money kept to be constant when we find the initial money equilibrium? Can the supply of money be upward sloping? Under which scenarios would that be the case? Where do I attain the optima for in equating the demand and supply of money? What are the two factors, main factors on which demand of money is dependent? For that matter, what are the different ways of demanding money? Is it only for speculations, or is it only for the purpose of safety, precautionary, or is it for the purpose of consumption? So you have to understand the different reasons why money is demanded. And when I write an equation, which form of demand of money that represents, I have to understand that. Then I will go ahead and talk about the ISLM approach, which is something which we derive from this demand and supply of money. What is inflation? What is Phillips curve? Why is there a negative relationship between unemployment and inflation? What is augmented Phillips curve? Why only, why can't I just stick to the first initial Phillips curve that was plotted? Why do I have to talk about full employment Phillips curve? What is the difference between the actual Phillips curve and augmented Phillips curve? We'll understand that in detail. What are business cycles? What is recession? What is depression? When do we have inflation? We are going to understand that. Why is boom associated with inflation? We'll understand that. Then we'll talk about the monetary and fiscal policies, which is effective under which scenario. We want to understand that. And finally, I'm going to talk about, and I'm not going to limit myself to this. We are going to talk a bit about a few questions which come from here and there, but are not specified as part of these topics, which is something that I will analyze as we go through the next video, in which I'm going to analyze the paper of 2019. Okay, so what is rational expectation hypothesis? What is adaptive expectation hypothesis? How is it different? Why is rational important? What is rational a progression of adaptive expectation hypothesis? I want to understand that also. The third module is going to talk about statistics and econometrics in detail. Now, we have to start by understanding probability. We have to understand by understanding distributions. If I ask you a simple question, give me an example of symmetric distribution. Give me an example of non-symmetric distribution. What is the relationship between F distribution and T distribution? Is T distribution normally distributed? We have to understand each and everything. What is central limit theorem? Why do we say that as the number of observations increase, it tends to reach a normal distribution? What are the measures of central tendencies? What is mean, median, mode? What is standard deviation? If I give you two questions with same mean and different standard deviations, I'm going to connect this to micro, but I'm going to ask you, supposedly the mean under two situations is, supposedly these are the three cases that you have. Here standard deviation is 3, standard deviation is 5, standard deviation is 7. Then what will a risk lover choose? What will a risk neutral choose? What will a risk averse individual choose? So I know that between these two, the lower the standard deviation, the lower the risk. But we know the higher the expected value, the better it is. So this will always have the highest preference because its expected value is higher. So, something like that. I want to understand, what does standard deviation actually imply? What does lower standard deviation mean? What does higher standard deviation mean? What is correlation? What are index numbers? What are the different kinds of index number? When I talk about index numbers, which takes base year to calculate everything, which takes current year to calculate everything, what is Pache index number? Then I'm going to talk about sampling methods and sampling distribution. I'm going to talk about hypothesis testing. What do I mean when I reject my null in favor of alternative? When do I do that? What happens when T calculated is greater than T tabular? We're going to talk about regression models. What is blue? What happens if in fact it's a non-linear model? Can I still go ahead and apply my can I still go and apply a CLRM model, or can I not do that? What are the assumptions of CLRM model? What is heteroscedasticity? What is autocorrelation? We're going to talk about the identification problem and simultaneous equation models. This is important. And finally, I'm going to talk in detail about the time series model. The next module, which is important, is mathematical economics. In mathematical economics, the first thing which is important is the relationship, is sets and relations. You have to understand what is a set, what are functions, what is continuity, what is a sequence, what is a series, what are matrices, what are vectors. I'm going to talk in detail, and this is important because this is something which is taught in a lot of graduate colleges and post graduation, so you should know this. When we talk about the input output model, it's important you have definite questions coming from the input output model. How do I find the equilibrium in the input output model? And then you have to go ahead and talk about the differential equations. So this is something that we are going to discuss in detail in the mathematical models. Now, you have to understand that here we are also going to talk about linear algebra, and I'm going to also talk about static optimization problems. So you would have heard again something that I don't want to discuss in detail for now, but we will talk about the Leontief model. You know I'm not going to again we will introduce this as we go ahead. Now, the next thing that we're going to do is international economics. International economics, a lot of students get confused. They don't they get a little confused when they talk about the exchange rate and whether the transaction, where is it going to come, whether it is going to be a part of balance of trade, whether it is going to be part of a current account, capital account, or where the transaction should appear as part of the balance of payment. So I'm going to talk in detail about what is international trade. I'm going to talk about the different theories of international trade. I'm going to talk about what is comparative advantage, what is absolute advantage. I'm going to talk about how do we ensure that the BOP is always in balance, what is exchange rate, what is fixed exchange rate, managed floating, what is flexible exchange rate, what is arbitrage. How do you gain from arbitrage in the short run? What are gains from trade? What is TOT, terms of trade? What is its formula? What is trade multiplier? What happens when actually income of the foreign country increases? What happens to your exports? What happens to the trade multiplier? What is dumping? I'm going to give you a classic example of dumping. Maruti 800. I'm going to give you other examples too. What is it? What are the trade barriers? And then a little theory part that I'm going to cover, which is going to be IMF, GATT, WTO, regional trade blocs, etc. The next module is going to talk in detail about public economics. Public economics, first of all, is going to talk about market failures, because that is where we actually want to understand public goods. The entire phenomena of public goods revolves around the concept of market failures, even externalities for that matter. Right. So, we're going to talk about market failures. We're going to talk about what happens in case of public goods. How do you find optima? We are going to talk in detail about what is Pigovian tax, something that I think so I haven't mentioned here, but it's important. What are the different ways to deal with public goods, to find optima in case of public goods? What is collusion and consumers welfare? Then what are progressive taxes, non-progressive taxes, but I'm going to also compare them with proportional taxes. So, proportional taxes have the minimum deadweight loss. Non-progressive taxes have the maximum deadweight loss. In non-progressive, I am actually referring to progressive plus non-linear also. This is progressive linear. This has a deadweight loss which is more than proportional. So we have to go ahead and check about what is the difference between proportional, progressive linear, progressive non-linear, which has how much deadweight loss. Then I'm going to talk about incidence of taxation, how it is related to elasticity of demand and supply. What is public debt? What is public budget? What is budget multiplier? Important question. What are the fiscal policies? And finally, the management of public debt. Now, the next module is money and banking. A lot of people try and combine this with macroeconomics. So money and banking is going to have components of money supply in detail. What is narrow money? What is broad definition of money? What is the role of central bank? What is the role of commercial bank? What is called lender of last resort? Why is it called so? What are the instruments of monetary policies? What do you mean by treasury bill? What are the other instruments? What is repo rate? What is reverse repo rate? What is SLR? What is, so everything actually in detail, CRR, etc. Then we are going to talk about capital market and its regulation. So what is secondary market? What is primary market? That also we're going to talk in detail. And then we're going to talk about the capital market and money market also. The next module is going to be growth and development economics. When I talk about growth and development, we are going to talk in detail about what is the difference. First of all, a lot of people don't understand the difference between economic growth and economic development. What are the various theories of economic growth? What is Ricardian theory? What is the theory given by Schumpeter? What is the unbalanced growth model, balanced growth model? What is big push approach? Then we're going to talk about the Harrod-Domo model. We are going to talk about Solow model. We are going to talk about Calder model. We are going to talk about what are the indicators of economic development, human development index. I'm going to talk about the sustainable development goals. Now you have to understand that poverty and inequality have various index, okay? And for example, absolute poverty, relative poverty, then poverty gap ratio, then you have different ways of calculating poverty and inequality. What is Lorentz curve? So we're going to talk about all those factors also. The next module is environmental economics and demography. How is environment a public good? How do people overuse environment? How does free rider problem takes place in the environment? How does market failure take place? Again, something which this course theorem is completely related to public economics also. What are the theories of population? How do I know that population after increasing might also decrease? Is this related to the rate of development? What is life table? What is age structure? What is demographic dividend? Important. What are the concepts of fertility, morbidity, mortality, migration, etc.? When do people migrate from a rural to an urban area? What is the impact of rural and urban area? So more about demography and some part about the environmental economics is what we are going to talk about in detail. The last module of economics is going to be Indian economy. This is, believe me, the most easy and the most difficult part. If you are good at understanding the patterns, the growth structures, identifying how and what happened. For example, if I talk about agriculture, what was agriculture in 1950s? How did agricultural change? What was green revolution? How did that improve that? What was the second part of the green revolution? What happened after that? And so on and so forth. What is the current employment rate, etc., etc.? If you understand that pattern and structure well, you understand Indian economy well. Similarly in the industry sector, similarly in the service sector, what is uh, missing the middle? What happened to the way that India grew? Did we skip the part where we had to develop our manufacturing sector and directly jumped to the part where we developed our service sector? What happened in that case? Then foreign trade, what happens to BOP? What happens to the flow of foreign capital? What happens to the reforms? What are the kind of reforms that have took place in the past? What is the role of Niti Ayog? We will also study that. What is FRBM? We are going to also talk a bit about what are the center state financial relationships. When I talk about the center state financial relationships, you should be clear that the center gives, distributes some taxes with the states, its revenue with the states, and the state has to also distribute some of its revenue with the districts, with the panchayats. So that is where we have the role of the financial commission and state financial commissions. Are they really into existence? Are they doing their task? What is the formula that is used to make the transfer from the center to the state? What is happening to the SFCs? So we will also talk about those. Now, with this, we cover the syllabus part of what comes under the module of economics. In my next video, I'm going to cover the pattern that was followed in 2019 December paper. We're going to discuss in detail about what kind of questions came, how many questions came from market structure, how many came from producer theory, how many came from macroeconomics, how many came from international economics, and so on.